Hi, welcome back. I'm Naren, and today we will be discussing about gold investment, particularly sovereign gold bond (SGB). So, why we should invest in gold? One reason is wealth protection. We can use gold as an asset class so that we can diversify our investments, and gold can also be used as an hedge against inflation and stock market. So, when the stock market goes down, most likely gold prices will go up. And gold can be used as a liquid asset class. Whenever you want some cash, it is easy to convert gold into cash. And also, if we are talking about physical gold, emotion is also one of the reason we want to cling on to physical gold as an asset class. And we will be sure that it will never go to zero, the price wise. So we won't lose the whole asset that we invest. This is the 1 gram gold price in India from 1970s till date. So, for the long term, it looks reasonable to invest in gold. This is 10 gram gold prices in India from 60s till date. And if we are investing in gold, one of the issues can be physical safety, where you will store the physical gold. How we can make sure that it is safe. You might have to depend on bank lockers. So, what are the alternatives? Gold ETF is one option, which is an exchange traded fund which tracks domestic physical gold price, and it's in electronic form, and it's also more liquid. Whenever you want cash, you can easily convert gold ETF to cash. So another one is sovereign gold bond, which we will discuss in this video. And also there are many digital gold apps like Jar app that also try some smart investments. Like you can do auto investment. For example, if you're doing daily many UPI transactions, you can ask the app to round off any payments through UPI so that small fractions of rupee, it can use that to buy digital gold. It is kind of nudging you to do investment. So we can buy SGB through banks, like through online banking also. And RBI holds these SGBs. So it's like you can diversify across the institutions where you invest so that you can kind of decrease the rate of failure of your investments. Like if you just put it in a bank, then if bank goes down, you will lose your money. Whereas this DBs will be with RBI. So this kind of safety is guaranteed. And whenever you invest in SGB, RBI will also pay interest on your investment, which is 2.5% per annum and paid twice in the year. So this is apart from whatever the growth in its value, that is gold value. And note that the SGBs have an 8-year lock-in period. So whenever you buy SGB with the RBI, you cannot get your money back for 8 more years. And when you complete the 8 years, during maturity, you will get the corresponding gold price during that time. So since 8-year lock-in period is kind of a drawback if you want liquid money, there is an alternate solution. Once you buy the SGB, immediately it will be visible in your broker's account, because whenever you want to buy SGB, you need to provide the demat account details. So in the secondary market, which is your stock market, So there you can sell your SGBs. Though the volume will be low, you might get some buyers. But note that the price per gram of gold in the secondary market is usually around 100 rupees per gram less than the actual gold market price. So you can do this only when you want to exit for say liquidity purpose. Note that you cannot just buy SGB whenever you want. RBI announces the tranches when you can buy these SGBs in a year. Normally, they will do this in 10 tranches in a year. So it's kind of one per month. So with maybe 2 months break. And it will be open for 5 days in that particular month. So they announce the price of the gold based on 3 weeks average, previous 3 weeks average, and they announce it, and you can buy SGB for that price in a week in that announced period for 5 days. And if you buy this online, and then RBI provides a discount of 50 rupees per gram, and you need a demat account to purchase SGB. And you can only invest maximum 4 kg of gold in a year through SGB. Note that it is 4 kg in that particular year, not your cumulative investment in SGB across multiple years, or that you hold at that moment. And normally you can try 5 to 7% of your investment in gold related asset classes as part of the asset allocation. You can check out my another video on asset allocation to find out more on the allocation, why we want to do that. And about tax implication, the interest that RBI pays you, which is 2.5% per year, that's taxable with the regular rate of your slab. Whereas the amount that you get during maturity will be a capital gain, and that is tax exempted. So that's it about investing in SGB. So try it out for better asset allocation and also as an hedge against falls in the stock markets, and also periodical 2.5% per year interest payment as kind of liquid, some kind of liquid. So if you find this useful, please like, subscribe and share. And thanks for watching, and good luck with your gold investment.